All right, what's up, guys? Welcome to a new video today. I know it's late, but we're just gonna make it quick and simple for you guys and just discuss what is currently happening with the market right now on the S&P 500. This is a daily chart on October 17th. Um, Currently we're we're holding a major level right now, and there's a anticipated move coming up in the next couple of days. And well, I'm just gonna talk right now about the chart, um so it's more understandable. Right now what we're seeing is a trend line and a big test and some pretty volatile candles for the past few days, especially on Thursday, Friday, and today on Monday. um so right now, last week we all anticipated a big drop in the market, towards 340 ever since we broke 350. But it looks like we held it, and we did have a big overnight gap down. And as soon as the market opened, the market just went straight up on that day. And um on Friday we had a nice pullback back inside the candle, um, which did end up looking like a reversal coming back down again. But today we did held that same level at 357, and then instead we bounced back up towards the trend line and also the 20 SMA, which I talked about in my last video on the S&P 500. So that 20 SMA for the past couple of weeks has been acting as a pretty strong resistance. The trend line right here, the blue line, is going to be your 20 SMA. This is the only time we broke it, but we ended up coming back down. And I would say right here in this area is where the 20 SMA started to act as resistance back in August of 2022, 22nd, sorry. So we broke down, came back up, got rejected, came back down, tried breaking again, we came back down, and then recently over here we got rejected perfectly from that 20 SMA, came back down, we got rejected again, and today we are back at the same 20 SMA. But this time it's a little bit different because we are starting to enter the earnings season. And this week we do have Netflix on Wednesday or Tuesday after close. So my thought on this market right now is I do believe that the market is going to see a short-term relief rally and run up into the earnings, start pushing higher into the earnings. And who knows, but they could be reporting some pretty disappointing numbers. And that is when the reversal back down will start occurring on the markets. Um, so Netflix is starting, and I'm sure Tesla, Apple, Amazon, Microsoft, Facebook, and all that are reporting next week or in the next 2 weeks. And maybe that's when the market will stop running. And once those reports are out, especially from Apple, Amazon, that is when the markets will start to pull back. But right now, I do think the market can see some kind of relief rally a little bit higher before we get those reports out and we start pulling back. So let's talk about the chart real quick and what I think will happen, and then we will start going into some other charts to explain why I think we will see some more room upside before we come back down. So SPY right here, S&P 500. This is the fourth time, I believe, one, two, three, four, fifth time right here. We are trying to test and break the estimated 20. Which is going to be around 367.30-ish area, or I'll just say 367 right now. As soon as we break that trend line, which is going to be on hourly. So today we did have a gap up and pretty much flat all day today, just holding up pretty well. Tomorrow this could be a bull flag of some sort. I would say in the 4 hour will be a better looking bull flag. No, pretty choppy, but we'll just say this is a bull flag or consolidation and just hold it at the price very well. And tomorrow we will start legging up higher. And you can see right here, we are seeing some nice, let me get rid of the candles real quick, or the SMAs, so it can be clear right here. So tomorrow or right now we're seeing a gap up on futures right now, but I wouldn't really say it really matters until we actually open at that price. But currently futures are at 373.70, which is up pretty nicely right there. And that is what I was expecting to see on S&P 500. But hopefully we open around 373 and we just sell our calls right there and just lock a profits. But technical analysis, first target is going to be 371. That is going to be this area right here, where we rejected from last Thursday. And once we break that, we can start to fill the gap right here around 373 area, which is going to be right here from right here. And then we can start getting towards 378 to 380, which is going to be a little bit of a double top resistance that we had previously back over here in September, like late September and early October. If we do somehow push higher and continue higher, we can start getting towards the SMA 50, SMA 100 area, which is going to be around 390 if we get those back on. You can see after 378 to 380, it's a pretty quick move towards that 388 to 390 area, because you can see how we've had these candles right here have a pretty quick drop back to 378 from these areas. So that is what going up can do, the same, pretty much the same way this did going down. Right now we're not going to really focus on this 388 to 390 area. We're just going to focus on 371, 378 for right now, because we're not 100% sure that we're going to see 388 to 390. So my plan for tomorrow is to play, well, let's just say that I don't have calls right now and I'm waiting for a trade to happen. So it's either going to be calls above 371 and fill that gap to 373, maybe a chance to 378 tomorrow too, if we just keep pushing up. And let's say that we're already at 373. I would be more cautious because we're pretty much already high up there. We had a gap up. We could be a gap up in a fade in the middle of the day and a gap up again. Just continue, wait until earnings are starting to report and then pull back. But right now, I'm just going to do calls above 371, fill the gap to 373, take most profits, and see if we can get to 378. If not, futures are pulling back overnight or back down to where we are right now at 367. I'll just play puts under 364 because that is a big area where we have a big gap just under that 364 from today's daily candle. Under 364, we can see drop back down all the way to 358 to 357 area. And that is where I'll be playing puts under 364. So right now I'm leaning bearish on the market overall, but my gut is saying that we're going to see a push higher and just run up and trap more bulls and just run up into earnings until we get those reports from Apple, Amazon, all those companies, and then start pulling back. So calls right now are what I have. Well, let's go on QQQ real quick and explain what I think is going to happen with this one. So since SPY is currently at resistance on the SMA 20, with that being said, I think that could break over. QQQ also has room to the SMA 20, which is going to be around 273, and tomorrow it should open around 272.50-ish area, which is a little bit room, but right now it's currently sitting at 274.90, so that's a very good area. But with that being said, it would be even better if QQQ opens at 275 or even higher. If it ends up opening over 275 tomorrow, 100%, I think this is going to fill the gap all the way to 279, or we'll just say 280. 280 is going to be the next target for QQQ if we end up breaking 275. So pay very close attention to that one, especially for tech stocks. Once this gets filling the gap, tech stocks will rip higher. Apple, Amazon, Microsoft, Facebook, Netflix will move the market higher. So that's what I'm saying about the market right now. This is why I'm saying my gut is leaning higher. I mean, leaning bullish Even though I'm bearish on the market overall, we may see a temporary move higher in the markets. So QQQ does have room to that 275 area or 274, but currently it's at 274.90. We'll just say 275. If we once we break that 275, pay attention, and I would say this will be very good area to get calls as soon as we break that, and then we will get 280, 279 to 280, and then possibly even higher to 283, which is going to be where that double top is, or I'll say box range resistance right here, 283. So paying very close attention if you are trading tech stocks, QQQ can be the way to go for tomorrow. SPY as well is a good looking setup, but pay attention tomorrow. Hopefully we do move higher, just to get that just clear out of the way. The higher we go, the better it will be for bears, especially if you are trying to grab swing puts in the market after reports are done from all those companies, especially for next week from Amazon, Apple, and all that. So that is what's going on in the market right now. Be very cautious, by the way, because you can see how the past 9 or 10 months in the market, very, very tough trading, especially swing trading. How these candles are very large compared to what it was back in 2020 and 2021. You can see over here, candles are very, normal 1 to 2% a day. Sometimes 0.50% a day, but every single day in 2022 has been, 2 plus 3 plus 4% moves in the market. SPY has been making very big moves in the market, and that is what that's what's scaring a lot of people trading, especially swing trading. So if you're a pretty heavy precision on any precision that's high risk, be very careful with that. Especially for small account traders, be very careful. We'll see how it goes. Hopefully we move higher before we come back down, and we'll just clear that out of the way, and that'll be better conviction for bears or put buyers. So pay attention to these levels on the S&P 500. If you want to copy it, go for it. 378, 371, 364, 357, 350, or 348. And on QQQ, go ahead and copy on here. 283, 280, 275, 267, and 260.85. That'll be it for today's video. It's a late video. If you're watching it in the morning, go for it. Watch it before the market opens so you have an idea of what can happen, and you will know what is going on in the market. If you like the video, please give it a like, leave any feedback you have. I appreciate it. Thank you all for watching, and I'll see you next time.